In this video, I'm revealing the best strategy that you can use with the MACD indicator. So without further ado, let's get on with the video. The Moving Average Convergence Divergence, or also known as the MACD, is one of the most simplest and popular indicator used by traders. Essentially, it is a trend-following indicator that shows the relationship between two moving averages. So first, let's apply it onto our chart. So, you want to go to the indicator section, type in MACD, and click the one on top. Now, before we start, we first need to know how does the MACD work. So, we can see here, there are four components to the MACD. First, we have these two lines, the MACD line and the signal line. Notice the difference between the two. The MACD line moves faster and is more sensitive to price changes, which will be the main focus of the MACD indicator. Compare that to the signal line, which reacts slower to price changes, therefore giving it a more smoother appearance. Next, we have the histogram, which represents the difference between the MACD line and the signal line. For example, if the line crosses above the signal line, the histogram will turn green, and if it crosses below, the histogram will turn red. The gap between the MACD line and the signal line also affects the size of the histogram. As you can see, if the two lines are further apart, the histogram gets bigger, and if the two lines get closer, the histogram becomes smaller. And finally, we have the zero line, which simply represents the center of the MACD indicator. Now, the way traders utilize this indicator to identify momentum is by looking at the crossover between the MACD line and the signal line. Let me show you an example. If the MACD line crosses above the signal line, it indicates that the market is on an upwards momentum. And if it crosses below, it indicates that the market is on a downwards momentum. Traders can also utilize the size of the histogram to determine the strength of the momentum itself. If the MACD crosses above the signal line while the histogram is getting larger, it shows us that the upwards momentum is getting stronger. Similarly, if the histogram is getting smaller in size, it indicates that the upwards momentum is getting weaker. Now, we've already established that the MACD is based on moving averages, and so the question is, why should you use the MACD and not the moving average? Well, let me give you a quick comparison. So here we have the MACD that is set to default settings, 12 and 26. And over here, we also have two exponential moving averages which are set to the same values as the MACD, which are 12 and 26. Notice the correlation between the two indicators. Every time we have a crossover on the moving averages, we also have a crossover on the MACD, but it's between the MACD line and the zero line. But remember, what we look for in the MACD is not the zero line, but rather the crossover between the MACD line and the signal line. And so as you can see, the crossover on the MACD gave a much earlier entry signal compared to the crossover on the moving average. That's why I prefer it as my momentum indicator. Now, let's talk about the different strategies that you can use with the MACD indicator. So first, a common mistake that traders make is that they're using the indicator by itself. Let me show you why it's a bad idea to use the MACD alone. So here, we can see that the overall market is on a downtrend. However, the MACD is crossing over upwards. So notice how the signals are contradicting. The MACD is indicating a bullish momentum, but the market is on a downtrend. This is exactly why you shouldn't use the MACD by itself, because what the MACD is showing us is only the short-term momentum. And as traders, we also need to take the long-term trend into consideration, because we never want to trade against a trend. And so, a simple but high win rate strategy that I recommend for beginners is by combining the MACD with a long-term trend indicator like the 100 EMA. This way, we can safely trade the MACD while making sure that we're staying within the same direction of the long-term trend. So this is how you trade the strategy. The first step is you want to identify the long-term trend by looking at the 100 EMA. If the price is above the 100 EMA, it indicates that the long-term trend is up. And if the price is below the 100 EMA, it indicates that the long-term trend is down. So once you've identified the trend, The next step is we want to look for crossovers on the MACD that shows the same signal as the long-term trend. So in this particular example, we can see that the long-term trend is up, meaning we only take signals when the MACD crosses over upwards. And so here's where you want to take a long position. Now for your exit strategy, you can place your stop loss at the nearest swing low and set your profit target at 1.5 times your stop loss. And as you can see, this trade ended up being profitable. So let's look at another example. In this chart, we can see that the price is below the 100 EMA, indicating that the long-term trend is down. Next, we have a cross down on the MACD, and so this will be our entry signal to go short. Now for your stop loss, place it above the nearest swing high and set your profit target at 1.5 times your stop loss. And as you can see, the price hits our profit target, and so this counts as a successful trade. So that was a simple MACD strategy for beginners that you can use. Now, for advanced traders, if you want to get more profits using the MACD, you cannot simply rely on beginner crossover techniques. Because remember, crossovers tend to work only on trending markets. If the market is on a range like this, the indicator will give you many false signals. So that is why if you want to increase the win rate, I recommend using a more advanced version of the strategy, which is by combining the MACD with price action. So here's how the strategy works. The first step is we need to choose a time frame. In this case, I'm using the 4-hour time frame. Now the next thing you need to do is identify a key level within this time frame. So as you can see, the price went up, hit and reverses downwards, and so we can draw a resistance line up here. The next step is you want to wait for the price to approach the same key level once again. Now once this happens, we are expecting the price to reverse downwards. However, just because the price touches a key level doesn't guarantee that a reversal will happen, because key levels aren't magic. Prices can always break right through. And that is why we need to use extra confirmation to make sure that there is actual downwards momentum as price touches this area, which is where the MACD indicator comes into play. Now, what most traders will do is that they'll actually wait for the MACD to cross over downwards before taking a short position. However, by doing this, notice that the downwards movement has already been made and you would have entered in late. And so a secret trick that I use to get an earlier entry signal is by zooming in 2 time frames below. So I'm currently in the 4-hour chart, so let's zoom in into the 2-hour chart. So here's the 2-hour chart, and all we need to do is wait for the MACD to cross over downwards in this new smaller time frame. And so this is where you want to take a short position. So now, let's go back to the 4-hour chart and compare the 2 entry signals. So now we're back at the 4-hour time frame, and notice, if you would have used the crossover from the 2-hour time frame, you would have entered in the trade here. But if you would have used the crossover from the 4-hour time frame, you would have entered in here. And even though both trades ended up being profitable, the smaller time frame crossover still gave us an earlier entry signal. So let's look at the strategy one more time. So here's the pound yen on the 2-hour time frame, and over to the left, we can see that prices went down, hit and reverses upwards, making this a key support level. Now, as prices went back to this level again, we want to confirm that there's actual upwards momentum as price touches this area. So again, you want to zoom in 2 time frames below and apply the MACD indicator. So now, all we need to do is use the MACD to confirm the bullish momentum by waiting for it to cross over upwards. Once this happens, you take a long position. Now, let's go back to the 2-hour time frame and apply our exit strategy. So for our stop loss, you can place it at the key level and set your profit target at 1.5 times your stop loss. And as you can see, this trade ended up being profitable. So, I just revealed to you high win rate MACD strategies that you can immediately use right now. And all I ask for in return is for you to invest 2 seconds of your time into liking the video and subscribe to the channel. It literally takes only 2 clicks, but it means so much to me. And you can also check out my other videos as well. So thank you guys for watching, and I'll see you in the next video.